Hi, today is September 3rd, 2020. I am Ashley Wilkin with the Rice Partnership, and I have Orest Saikevych here, our Chief Investment Officer. Hi, Orest.
Hi, Ashley. Hello, everyone.
So today we're going to talk about international investments. The U.S. stock market has been a great creator of wealth for our clients. So why invest in international?
Great question, Ashley. What we look at as far as the different asset classes that we invest in are correlations. Correlations are basically the extent that the different asset classes move up or move down together. We want asset classes to not necessarily have high correlations. That way they diversify the portfolio better. There are certain areas of international equities that have lower long-term correlations with U.S. stocks, and those are the areas we want to invest in.
So what areas of international are you focused on investing in right now?
The areas that we like are in emerging markets because research has shown that emerging markets have lower long-term correlations with U.S. stocks. And at the same time, certain countries have favorable growth prospects. We found that the developed markets, such as Japan, the Eurozone, etc., have high correlations with the U.S. and lower longer-term growth. So we found them to be not that good as far as diversification and not that good as far as investments. So we prefer looking in the emerging market international equities.
So what kind of criteria do they have to meet for you to invest in them?
Well, one of the things we like to do is look at individual countries or sectors of individual countries rather than have a one-size-fits-all philosophy. We like countries with, as I mentioned, good long-term growth prospects. The GDP is probably the central measure of economic growth, and what really drives longer-term GDP growth is population growth and productivity growth. So we look at countries that basically possess both characteristics. We also like, if possible, it's not always possible, countries that have stable democracies and a rule of law where corruption is not endemic. So we don't like countries like Venezuela or Argentina or Russia for those reasons. And also, as far as the individual country ETFs, we like to focus on ETFs that are invested in major companies of those countries and that also have good liquidity.
Okay, great. Well, we appreciate your insights as always, and we look forward to next month's video.
Thank you, Ashley, and stay well, everyone.